Turning now to Wall Street, it was a lazy summer day of trading, but there was still enough oomph for the Dow and the S&P 500 to hit new records. And the advances came despite disappointing economic news showing that factory orders in May rose much less than expected. Here's how the major averages looked at the closing bell. The Dow rose 20 points, the Nasdaq lost a fraction, and the S&P inched up by a point. Even with the Dow and the S&P standing at historic highs, Dominic Chu reports that investors are still finding value in the stock market.
Finding value in a stock market that sits at record highs can be tough, but it's not impossible. Investing philosophy and strategy are important. Oftentimes, it means looking for a few key characteristics to help find the right stocks.
Most important of anything I look for is earnings growth. Consistent earnings growth historically and prospectively. I have to know how a company's making money and how it's going to continue to make money and expand those margins.
That might be one of the reasons why investors have found favor in shares of computer chip maker Intel. It's one of the leading performers in the Dow Jones Industrial Average this year and has grown earnings per share by around 15% per year over the last 5 years. But while many companies are still showing signs of strength, picking when to get into the stock market can be tricky. Some experts are still waiting for the right time.
We've had 23 record highs in the S&P 500 in 2014. Don't let that sweep you up and make you shift to get more aggressive at this point in time. So I think diversification is the key across both asset classes and geographically going into the end of the year.
And that brings us to another key point. Investors don't have to be limited to just investing here in the U.S. Depressed prices elsewhere around the world could provide intriguing opportunities.
Right now, we're about 2/3 domestic, 1/3 international. And in the coming months, we're going to shift roughly to a 50-50. We like what we see in Europe. It's certainly slower growth than what you see in the United States, but I feel like it's kind of the early stages of a recovery, and it hasn't taken hold yet. But oftentimes, that's the best time to invest.
In the end, many experts believe that taking a diversified approach to investing could be the right way to go. For Nightly Business Report, I'm Dominic Chu.